What to invest during a recession? A recession refers to a period of declining GDP and is generally defined as a sustained decline for 2 or more consecutive quarters. Recessions aren't just about poor economic growth. They are often accompanied by several other characteristics: widespread job losses, fewer available jobs, and more government relief. With all that in mind, you may wonder if investing is a good idea if we're in a recession or are headed in that direction. Is it wiser to take every dollar you make and keep it in cash? During a recession, stock values often decline. In theory, that's bad news for an existing portfolio, yet leaving investments alone means not locking in recession-related losses by selling. What's more, lower stock values offer a solid opportunity to invest on the cheap, relatively speaking. As such, investing during a recession can be a good idea, but only under the following circumstances. 1. You have plenty of emergency savings. You should always aim to have enough money in the bank to cover 3 to 6 months of living expenses, with the latter end of that range being more ideal. If you're there and have extra money at your disposal, you can feel free to invest it. If not, be sure to build a solid emergency fund first. 2. You're not planning to touch your portfolio for at least 7 years. Investing during a recession isn't for the faint of heart. You may think you're buying at a low, only to see your portfolio value decline a few days later. The best way to avoid losses in a recession and come out ahead is to take a long-term approach to investing. Plan on leaving your money alone for at least 7 years. 3. You're not going to obsessively check your portfolio. When the economy is in bad shape and there's lots of stock market movement, you may be more inclined to log on to your brokerage account every day and see how your portfolio is doing. But, if you're going to invest during a recession, you simply can't do that. The more you check up on your investments, the more likely you are to panic. And, when you panic, you risk making rash decisions, such as unloading poorly performing stocks, that force you to lock in losses. It can be a great idea to invest during a recession, but only if you're in a strong enough financial position to do so and only if you have the right attitude and approach. So what to invest? Number 1, index funds. These can be a great way to invest recession or not. By purchasing index funds, especially S&P 500 index funds, you're betting on the long-term success of US business. Over long periods of time, that's been a pretty solid bet. However, we completely understand that many people prefer to invest in individual stocks. The best investment strategy in any environment is to find good businesses and hold on to them for as long as they remain good businesses, but this focus on quality is especially important in a recession. Number 2, dollar cost averaging. Rather than trying to time the market, invest incrementally. This strategy refers to investing equal dollar amounts at certain time intervals as opposed to buying all at once. This way, if prices continue to fall, you can take advantage and buy more. And if prices start to rise, you'll end up buying more shares at the lower prices and fewer shares when your favorite stocks start to get more expensive. Number 3, seek out core sector stocks. When the rest of the economy is on shaky ground, there are often a handful of sectors that continue to forge ahead and provide investors with steady returns. So if you want to insulate yourself during a recession partly with stocks, consider investing in the healthcare, utilities, and consumer goods sectors. People are still going to spend money on medical care, household items, electricity, and food, regardless of the state of the economy. As a result, these stocks tend to do well during busts and underperform during booms. Number 4, focus on reliable dividend stocks. Investing in dividend stocks can be a great way to generate passive income. When you're comparing dividend stocks, some experts say it's a good idea to look for companies with low debt-to-equity ratios and strong balance sheets. Number 5, purchase precious metal investments. Precious metals, like gold or silver, tend to perform well during market slowdowns. But since the demand for these kinds of commodities often increases during recessions, their prices usually go up too. You can invest in precious metals in a few different ways. The most straightforward route is buying coins or bars from a seller or coin dealer. While this is different than buying a security, it's technically as good as any other option. Number 6, invest in yourself. If you lose your job and income during a recession, you can rebound by investing in yourself. You could go back to school to gain additional knowledge or skills that could help you get a better job. Paying down debt is another option if you worry that your job situation might go south at some point. The less money you have to spend on bills, the less stressed you'll feel during an economic crisis. Bonus tips: what not to invest in during a recession. Don't try to time the bottom. As previously mentioned, trying to time the market is a losing battle. Nobody knows when the market is going to hit bottom, so invest in stocks or funds you want to hold for years, even if the market continues to fall in the near term. Don't try to day trade. These days, it's easier than ever to start casually trading stocks, thanks to zero-commission stock trades and user-friendly trading apps. If you want to mess around with a small amount of money you're okay with losing, that's fine. But long-term investing is a far more certain path to wealth in the stock market. Don't sell just because your stocks went down. Last, but certainly not least, one thing that's extremely important to avoid during recessions is panic selling when stocks fall. It's human nature to avoid volatile situations when the stock market is in free fall. You might be tempted to sell before things get any worse. Don't give in to your emotions. The goal of investing is to buy low and sell high, but panic selling is the exact opposite. The bottom line is that, during recessions, it's important to stay the course. It becomes a bit more important to focus on top-quality companies in turbulent times, but, for the most part, you should approach investing in a recession in the same manner you would approach investing any other time. Buy high-quality companies or funds and hold on to them for as long as they stay that way.